Welcome to the Mayor of Money podcast with former Burlington Mayor Rick Goldring, CEO of Goldring Financial Leadership. In this podcast, we provide successful business owners with cutting-edge information and strategies in the areas of estate and financial planning, including wealth and risk management. The podcast also features exclusive interviews with very successful entrepreneurs that Rick has known and worked with during his career. Now, on to the show.
So today I want to welcome to the Mayor of Money podcast, Patrick Keeley. And Patrick is the president and a health and wealth specialist at Inukshuk Capital Management. So I want to talk to Patrick certainly about a lot of things today, but also why he has health and wealth specialist in his job title. But we'll get into that. Patrick, welcome to the Mayor of Money. Thrilled to have you with me today and to have a conversation about you and Inukshuk and your background and history and the background and history of Inukshuk. Welcome to the Mayor of Money.
Thank you, Rick. It's a pleasure to be here.
Now, you have a long history in the financial sector. You have a degree in economics from Bishop's University in Lennoxville, which is now Sherbrooke. You've been in the financial sector a long time. You're now with your brother in a very unique organization called Inukshuk Capital Management, which we'll certainly talk about. But tell me about the history of your career. And you had a particular challenge at some point, that health challenge that you shared with me in a prior discussion we have that I think would be of interest to other people, because so many people have go through battles and challenges with health, and particularly cancer. So tell us a little bit about your career. We don't want to focus half an hour on your career, but there's been some highlights. You have an interesting background of being with Luxkin Chef and Phillips Hager in North, and they're all very strong firms. But tell us what's been the focus of your career.
I guess to answer that question, I would say the focus of my career has been service. From the time I was a little boy, I've always been most inclined to want to help other people. And so I feel very fortunate to be in an industry where I've spent my time in education, learning enough to be able to help other people navigate their way through what's otherwise a very complicated part of all of our lives, managing our finances. And I come by it rather honestly. My dad and my grandfather, both of whom are big role models in my life, were in this industry. So I grew up, understanding it, admiring what they did and having interest. And from the time I was 10 years old, where I'd saved up some money through my paper route, I started investing in stocks. And I was living in Burlington, as a matter of fact, at the time, and my dad would ride the GO train into work every day. And he took me in with him one day. And at that time, there were no computers like the ones we had. They had quote machines and ticker tapes and things like literally paper that would be coming through the office that they would be reviewing. And we went home that day. He gave me a pile of annual reports of different publicly traded companies. And I sorted through them and decided to buy 5 shares of Noranda, which doesn't exist in that form anymore, and 5 shares of Canadian Pacific. And for years, for decades after, I would collect my very small dividends. They were probably not even worth the stamp that the envelope was on, but it introduced me to the notion of investing. And I watched those share prices be volatile, but ultimately go up over time. And so I was hooked at that point in time. And I went to Bishop's and studied economics and psychology. Probably enjoyed psychology more than I did economics, because I think there's a lot to it, and in connecting with one another, having some education was helpful to me. And I started my career at Bank of Montreal, Nesbitt Thompson specifically, which became Nesbitt Burns shortly after I joined. I guess I'm starting to come to terms with the fact that I'm getting old. So I was a broker. I was hired initially to start on the bond desk because I was too young to be hired into a branch. But ultimately, there was a branch manager who took a chance on me and brought me into his branch in downtown Toronto. And the Bank of Montreal had recently purchased Nesbitt Thompson and Burns Fry and formed Nesbitt Burns. And at that time, they were allocating bank branches to brokers. And it was a great opportunity for brokers to earn referrals from those branches. I saw that as a really great opportunity, but as a 22-year-old in downtown Toronto, nobody was going to give me First Canadian Place or a branch like that. But my family have been residents full-time and part-time of Muskoka for many generations. So I pitched the idea of having the opportunity to work in the Muskoka community with the Huntsville and Bracebridge branches, which I was given very easily because it wasn't really something anybody saw there being much opportunity to. And long and short of it was I committed my time to working in Muskoka. I spent half my week living at the Comfort Inn in Huntsville, joined the Chamber of Commerce, was very active with the local bank branch and played on a baseball team and bowling and so on, and just integrated into the community. And ultimately, within a few years, they built me an office there, and it became one of the most successful sub branches in the country. So proving that there were lots of opportunities, basically lots of needs of people in that community. And as you know, that's still home for me today in addition to Toronto.
So you started with one of the bank-owned firms, or a firm that became a bank-owned firm. Now you're with Inukshuk, that you're the president of. The transition, how did you get there from being with one of the big bank-owned firms to Inukshuk? What were you attempting to provide in the marketplace with Inukshuk, and what do you provide?
Well, I mean, I'm really fortunate that I've had the experiences I've had working for big companies like the banks, and I think they're a great place for people like us to start our careers, and they do so much for Canada in general. Excuse me. But ultimately, I learned over time, because I stayed with the banks for many years, as you know, and went into management, and ultimately was a senior manager with or senior executive with BMO in the United States, and president of RBC's high net worth business, RBC PH&N in Canada. But what I've come to learn is that large organizations like the banks have solutions that are good for clients, but they're also intended to be good for them. And to me, that's somewhat of a conflict of interest. I'm not suggesting that they cross that line, but there is some embedded self-interest in making sure that what their salespeople are doing are suited to their needs. And I also have come to realize that despite having great research departments like the ones that BMO and RBC have, and have been ranked very highly, that their analysts who produce top picks every year, those names do not outperform the markets themselves. And as I have lived through this career, when I started, my clients were all GIC people who had never invested in the stock market before. And so we called them GIC refugees at that time. It was the early 90s.
I remember it well.
Collecting 10, 12, 15% at times in GICs. Why would you own anything different? But then when interest rates came down in the early 90s, people needed to find other options. And mutual funds were very popular, as we all know at that time. That's sort of when they began to blossom. And so we all got comfortable with mutual funds. But as time has gone on, the advent of ETFs, which provide a mutual fund-like solution, but with lower cost, higher tax efficiency, and transparency, we all can point to the fact that there are statistical facts that the majority of people in my business, licensed portfolio managers like me, underperform the market itself. So it became this kind of waking up, or as my brother puts it, it was like waking up one day and realizing Santa Claus didn't exist, to think that you could actually outperform the market. And if you can't outperform the market, why would you not just own it? And why would you not own it in the most tax efficient and cost effective ETF you could possibly find? If you're at a bank, that might not necessarily be their product. So it may not be that you're going to be popular by taking that point of view. So my brother, Chris, who was the founder of our firm, started Inukshuk. It was a family generated idea, something that we all supported. And the platform that we manage today uses ETFs as the foundation of portfolios. So in other words, what we're doing is we like to own the market, because we know if we just owned the market, we would outperform 95% of our competitors who are trying to outsmart the market unsuccessfully. The other thing we realize is that the line that we are very comfortable sharing with our clients, and quite frankly, it's the right thing over time. But for some people, they don't necessarily want to live through massive market corrections. And if there was an option to not have to do that, would most of us not sign up for it? We believe the answer is yes, and that's been, the evidence of it. We have evidence of that. My brother Chris has spent decades analyzing price patterns in the market and determining that there were some identifiable trends in the way markets behave that were identified through price, not emotional information, but statistical information, and has spent decades building algorithms that we use today to determine when we want to be in the market and when we want to be out. So it's not to say that we're putting all our eggs in that basket, because there will be times where we might miss some opportunities, but it's given us a tool that has been very effective, and we've now been through 3 bear markets since our firm has been around. And in each case, our systems accurately identified there being a rising risk in the market that allowed us to take money off the table and protect our clients' capital so they didn't go down with the market in the fourth quarter of 2018 or in March of 2020 or through most of this year when our signals gave us indicators to get out in the fall of last year. So basically what we do for people is help them protect capital by sidestepping market corrections. And rather than selling proprietary products that, might have a self-interest embedded into them, we scour the market for the best available ETFs. And it's such a great place to be a buyer's market because there's a race to the bottom basically in terms of pricing, and you can own the S&P 500 or the Dow Jones for only a couple of basis points, like 2 or 3 100ths%. So that's basically the foundation of what we do. We're a family-owned and operated business. We work primarily with families. Our clientele probably skews a little bit on the younger side for our industry. In part because we have a lot of young entrepreneurs and professional athletes and entertainers. But we really see our employees as families, the relationships we have with our partners as part of our family, and our clients. And we want to keep it that way. We specifically have designed our business to not be like a bank, I guess, without being disrespectful to them. We just feel there's an opportunity to do something different.
You differentiate yourself in a significant way, obviously, by the 2 things that you said. A, you focus on the market and ETFs, and you're also developed some proprietary service of how to sidestep certain trends in the market which are negative. Those are the key differentiations besides the service you provide. But from a technical point of view, that's what you focus on.
Correct. Yeah.
And so let me ask you a back to basics question. ETFs, exchange traded funds.
Mm-hmm.
Tell me about the breadth of availability of different exchange traded funds, and how do you decide when you're putting together a portfolio for a client which exchange traded funds to use in the portfolio?
Well, the breadth is substantial, and if you look at trends in the marketplace and sales, the ETF industry is growing more dramatically than mutual funds. I think people are seeing that while there's a place for mutual funds, ETFs is something that they should have on their radar if they don't already. And the ETF market has its foundation in indexes. So the lion's share of assets in ETFs themselves would be ETFs that track indexes like the stock markets, bond markets. But they've also been very effective in giving people access to specialized parts of the markets. And to the point where now, if you wanted to have exposure to cryptocurrencies, for example, you could own an ETF that tracks Bitcoin or Ethereum. If you wanted to own, if you felt that the blossoming psychedelic drug industry was something that you wanted to invest in, there are ETFs that track that. If you wanted to invest in electric car technology, you could own an ETF that tracks that. So thankfully, the industry itself is very creative and in some cases responsive to client demand in building ETFs to give people direct exposure, so that for you or I or any other investor, we don't have to try to sort through all the different names and pick ones. These are giving you access to the sector itself.
Now you mentioned crypto. You mentioned cryptocurrency. Yes. Is that something that you include in your client's portfolio, or is it something that you do for people that are insistent they want to have exposure to that asset class?
Um, well, it's amazing how time changes because a couple of years ago, everybody was insisting, I would say, or significantly interested, because I think we all watched, people get extremely rich. We watched the price of these crypto assets accelerate and in dramatic fashion, unlike anything any of us have seen. So I'd say initially we were kind of fending people off, saying there's a lot of volatility here. It's not the kind of thing we would typically invest in. But we have softened in our approach, and at this point in time, I would say most of our client accounts do have some exposure to the tune of 1% to 2% of their portfolio, just to give some perspective to that. So we do have an ETF that we own, offered by Evolve, which is an ETF company that we believe in, and we think they're a very strong player. We know the people behind it. And they've been very effective at giving people low cost access to specialized sectors like Bitcoin, for example. So to answer your question, yes, we consider it part of our alternative asset allocation. And for the time being, that is an allocation we have in most client portfolios. And I think over time, it will probably be something that will grow. I do believe that it's here to stay.
So a trend that's being discussed today in the marketplace, in large part because of the decline of the indices on the major markets, both the bond market and the stock market. You're seeing more and more companies coming out trying to package alternative asset classes. And you look at pension funds, whatever big pension fund, they all have 40, 50% exposure to alternative asset classes. Now, your portfolios are liquid, are fully liquid. You use exchange traded funds. Do you have ways to get exposure to some of those alternative asset classes? And I think you mentioned one with the crypto. Are there other ways to get exposure to other alternative asset classes with ETFs?
Yes. At the moment, a typical client portfolio for us would have between 10 and 15% allocated to alternatives. And so we include Bitcoin in that. And as I said, it's typically 1% to 2% of that allocation. And the balance of the alternative allocations for our clients at the moment, we have a couple of different ETFs we use that are liquid alternatives. So they give us daily liquidity ETFs that trade on the market, but are uncorrelated to the market. Because most of us are at the mercy of whatever happens in the market. We own an ETF that is actually managed by National Bank, that is up this year. It has no correlation to the stock market, as you can see by the fact that it's up when the stock market's down. That is a core holding for us at the moment. And we also own a mutual fund, which, full disclosure, we manage. We were hired by a very strong mutual fund company called True Exploration, to build for them a liquid alternative because of the expertise we have, driven by my brother Chris, who's our chief investment officer, and our head trader Mike Niswaski, who's a 30+ year veteran in this business. We were retained and hired to build a liquid alternative for them, which has been in circulation and available as a mutual fund since January of this year. And it's outperformed the S&P by almost 20% this year. So that would be another core holding for us in our client portfolio. So we believe in having a core allocation to alternatives through liquid alternatives specifically, where there's opportunity to make money when the stock market goes down, but also more importantly, not be directly correlated to it, because most people don't know that there are ways of being invested and having absolute return strategies. In other words, strategies that are designed to make money whether the stock market goes up or down.
Fascinating. I'm going to switch gears a little bit, Patrick, and in recognizing that if anybody wants to get information about Inukshuk, they can certainly do that, and you through your website, and as long as they can spell Inukshuk or spell something close, they can Google it and they'll find you. Yeah. But in material that you sent me with your brochure about the services you provide, you have somebody on staff that's the Inukshuk health consultant, not wealth, but health consultant. You had a particular health challenge a number of years ago. Did that particular challenge and what you went through lead to you as a firm, Inukshuk, having a health consultant?
Definitely. We have some core beliefs that I think relate to a lot of the people that we have as clients, and perhaps others who aren't our clients that may be looking for a firm that has some alignment of interest to them personally. It's my belief, and we'll talk about what you're referring to, my health crisis, but it's my belief at this stage in my life. I'm 53 years old. I've come very close to dying. But I don't wake up without gratitude ever, because I'm just happy to wake up every morning. That almost didn't happen to me. And as life goes on, more and more great people that I know end up passing. And some of them haven't had time to sort of just catch their breath and be mindful and live in the moment and realize what they have to be grateful for. So I believe as wealth managers that none of the wealth that our clients have, or ourselves, or any of what we're saving really matter if we're not healthy. Healthy to me is not just being physically healthy, it's being mentally healthy, which thankfully, society now embraces and understands is equally important to making sure that your heart beats at an appropriate rate, but also spiritually happy. Like, I really do believe that connection is very important. And so if we as a firm do the best we can to manage our own physical, mental, and spiritual health, and can set an example for people that way, and do our best to share some of the things that have helped us be healthy that way by having people who live and breathe it, we feel that combination is important. There are people who, when we first introduced this idea, thought, you guys are in the wealth management business. What are you doing even talking about health? Like, I think we're just scraping the surface. Like, I would like to think that at some point in time, we can have clients who come to see us to review their portfolio, but also check in on whether they're doing well in their personal fitness goals, any spiritual goals that we've set together, and if nothing else, even talk about them. Whether we can't suggest that we're going to preach to people what they should do, but I'd like to think that if we're going to partner with people in helping them manage their wealth, why could we not, have a relationship that goes beyond that? So we do have somebody in-house who writes a piece in our newsletter each month. And at the moment, it's not as built out as we think it can be. It was affected in part by the pandemic, because we were doing some events in person with people prior to the pandemic. And then, of course, that was difficult to do. So we did some Zoom classes and things during the pandemic. But it's an area that gets me very excited. I think all of us at our firm very excited. And I think, if nothing else, when people look at our website to see the fact that we make a statement like health is wealth, hopefully people who believe the same thing as us will want to talk to us, because I think that there's so many people in our business today. All of us have become accustomed to selling whatever we do fairly well, but at the end of the day, who are you as a person? Well, we've made it clear in looking at our website the types of people we are, whether it be the art that circulates through our website, the scenery that people see, or statements like health is wealth. We think that speaks to who we are as a firm.
So your particular health challenge that you went through, what year did that occur? And tell us a little bit about your journey.
Sure. So I think it was in 2003. Yes, it was just before Christmas of 2003, when I was diagnosed with an advanced form of non-Hodgkin's lymphoma. And at the time, my wife and I at the time were living in Chicago, had a 2-year-old who was born there, and our son was literally only 5 months old. And my wife, who relocated with me to Chicago from Toronto, was not working, so she was looking after our children, obviously. We were obviously very scared because the prognosis was not very good, and we decided the right thing for our family was to move back to Canada. And thankfully, through some connections I had with people who knew people at Princess Margaret, I was introduced to a doctor there who specialized in lymphoma and was working on a treatment study for a very rare form of non-Hodgkin's lymphoma that I just happened to have, that didn't respond very well to CHOP, which was the conventional form of chemotherapy at that time. And so I began this treatment, and it was leading up to the time that I was diagnosed, I've always been a very healthy guy and worked out, and I was not feeling well for basically a year, and kept going to the doctor and complaining about pain and other things. And I was always told, you must have done something at the gym, or I was a young person, so they didn't really, cancer wasn't even on the horizon or radar. But ultimately, thankfully, a bump started to appear in my chest that I could point to and say, not only am I feeling terrible and I'm losing weight and I'm sweating at night, but I've got this thing growing out of my chest. And then everything got kicked into high gear. And that's when I got diagnosed. They had to remove a very large tumor from my chest. They had to basically remove the sternoclavicular joint on this side of my body. So I won't be graphic for anyone who's watching this, but my collarbone ends here and the sternum's gone and the rib's gone. So I have a cavity here. So after having that surgery and beginning chemotherapy, which lasted for many months thereafter, I had an arm that was basically lame. It didn't function because of the mechanics of not having this connection. And thankfully, and thank God, I was able to survive through very good medicine and good fortune and faith. And here I am today. The process for getting healthy, which was a long one for me, and I'm a type A personality, so I probably have an extreme side to me. I became very committed to I doubled down on my physical fitness and started working out more than I'd ever done before, in part because I needed to gain access to my arm again. And as I rehabbed and gained functionality and kind of figured out how I could use my arm without this connection, and the body just began to repair itself to the point where today I have equal strength in both arms. I became very committed to working out, and powerlifting became an interest of mine because I was so extreme in doing it, and I got into competitive powerlifting. And that, ever since it wasn't a new activity for me working out, but it's just something that I've doubled down and really immersed myself in health communities with healthy people. And it's, a wonderful part of my life today, thankfully.
Wow. Now, that's quite the story. And I guess the mindset that you had while you were dealing with cancer, can you tell us a little bit about, your frame of mind, or how you set your mind up for success as you were dealing with cancer?
Yeah, I mean, I'm definitely wired on the optimistic side. So despite how scary all of what was happening was, I would show up to the hospital, and the regimen I was on required that I have a portacath in my chest, a double portacath. So each time I go to the hospital, I had to be at the hospital for a week at a time to follow this experimental protocol. And 2 chemo lines were connected to my portacath, and they remained there for a week. So I'd have to be in the hospital for 7 days at a time, every 3 weeks for many, many months. But I remember when I would go to the hospital, I would show up the same way I would for a high school football game, like with that determination that let's do this thing. And it was never, woe me. It was, I would show up with a smile. I would be determined, and I'd make the most of my time in the hospital, to the point where I would pack a suitcase that had all sorts of different resistance bands in it. So I was in a hospital bed connected to a chemo pump for a week at a time. That's not, for someone who likes to be active, not a comfortable situation to find yourself in. So I connected all of these bands to my hospital bed, and I was stretching and exercising and working out. I would unplug the chemo machine and do laps around the hospital at Princess Margaret, and they called me Speedy on my floor, to the point, like, when the battery was about to go, I would plug it back in. But I'd be pouring with sweat. I actually found like I was gaining muscle while I was in the hospital because I was working out so vigorously. It was just, to me, and I'm not saying that I have a secret formula for beating cancer. I definitely don't. And I believe there was something far more powerful than me that led me to be here today. But I do believe, having had the experience I have, that having a positive attitude, having faith, having good relationships matters. I saw people in the hospital when I was there that didn't have that same mentality, and the outcome was different for them. So whether there's any correlation or not, I don't know, but I do believe that we all need to do our best to be happy and grateful and hopeful. And in my case, that led to me still being here today at 53 years old.
You mentioned faith as one of the keys. Can you elaborate on that a little bit?
Well, I mean, it's to some people, it's a touchy subject. using the word God can be offensive to some people. So whether it's God, higher power, the universe, the truth is I have a lot of faith. I believe in God. I believe that a connection to God is very important to me and a very important part of my life. So I have enough evidence in my life for me. I don't preach that to other people. I don't suggest that people, they can make their own point of view. But just the fact that I'm here, just the fact that certain people have come into my life, the fact that certain things have happened to me can only be explained by there being a higher power. And so I would like to, for me, it's a part of recognizing, being thankful for that and feeling that connection. And if nothing else, as I say to some of my friends who don't have the same inclination, just the act of prayer for me and meditation and having some quiet time in my day where I feel that connection, if nothing else, if it can't be explained by some kind of divine connection, if the scientists were able to prove that not to be true, then for me, for the sake of my own brain and my own heart, just getting into a place of meditation where I'm quiet and I'm grateful, a lot of great thinking comes from that for me. A lot of peace comes from that for me. So whether it aligns to my own religious or spiritual beliefs or not, it still is something that is a part of me being healthy.
I appreciate you elaborating on that, because I find that the faith part with different people fascinating. And thank you very much for being so open and honest and upfront and candid with your views with regard to your faith. So here we are, we're taping this in the middle of October 2022. We're going through, I'm switching gears now back to business and back to wealth management. We've been through a heck of a year with the increasing interest rates in both the bond market and the stock market down more than double digits, or down double digits. How have you and your clients made out this year?
Well, pretty much everybody's down. So I don't want to be the guy who says that we're the only people in the world that are up, and that's just not possible this year. Everything is down. But, I always, when I speak to clients and I do review meetings with them, I do my best to give them a score. And I say, I'm giving us a score this year of a C or a B or an A or whatever it may be. And I try not to gloat, or I've never given ourselves an A in the time that I've been at the firm. But if ever we were going to have an A, it would be this year, in my opinion. And there's some things that, I used this analogy when I spoke to a client. Becoming a client of a firm like ours is like going to a tailor and having a tailor-made suit made. You go in with your measurements, the suit is made, and you walk out of the store feeling good. But then, the material might stretch, you might gain weight, you might not like the fact that it fits tight in the chest or whatever it may be. And there's an ongoing process to alter it and get it just right. The same thing happens for us. It takes time, because sometimes we make moves as portfolio managers that are emotional in nature in response to how our clients are feeling. And that may not necessarily be what we recommend, but we have clients who've been with us for a long time. We have a very tenured clientele, and we got a lot of things right coming into this year. We moved out of bonds at the end of last year into a bunch of ETFs that have a covered call overlay on them that produce a very high yield in excess of 6%. And they fared much better than the market this year. We added exposure to liquid alternatives. And as I pointed out, in one case, it's actually up this year. But on average, that segment of a client portfolio is basically flat on the year. So we've been underexposed to bonds. Where we have bonds, we've taken our duration down substantially. We moved out of emerging markets and Europe before the year started, and we pared back our exposure to North American markets earlier in the year, and we've held substantial amounts of cash and gold. So the net result for most of our clients this year is that they're substantially ahead of what the benchmarks are. I don't even think that people realize where the benchmarks actually are. Like, you've got NASDAQ down north of 30%, the S&P 25%. You start looking at like individual names. Shopify is a household name in Canada now. It's down 80% this year. Meta, Facebook, in other words, is down 60+%. Microsoft approaching that. Amazon. I mean, these names are down substantially more than the market. And then to cap it all off, you've got the bond market, which is down more than it's ever been in any of our lifetimes. There's never been a time in anyone's who's living today a lifetime where both the bond market and the S&P were down 10% or more at this point in the year. So this is an extraordinary time for investors, and to, basically our point of view is if you can preserve capital as best as possible right now, then you'll be well positioned for when the markets do rebound, which of course they will. So our strategy of late has been, how do we want to be positioned for when that's going to happen? And are there some other asset classes that could potentially perform well in that environment? And we're doing some analysis on that right now.
Well, listen, Patrick, I want to say thank you very much for being on the Mirror of Money podcast today. I've certainly been enlightened by the work you do at Inukshuk, but more so about you, the individual, and what you've been through and what you've learned in your lifetime, and your willingness to share that with us. I thank you very much for being on the podcast today.
My pleasure. Thank you for asking me.
And I want to thank everybody for tuning in to the Mirror of Money podcast. We'll see you next time on the Mirror of Money. Thanks for tuning in.
Thank you for listening to the Mayor of Money podcast. Click the subscribe button below to be notified when new episodes become available. If you'd like to have a one-on-one discussion with Rick or have an idea for a particular guest or topic, contact him at rick@rickgoldring.com. See you next time on the Mayor of Money podcast.